Good morning, viewers, and welcome to the Market Review, where we bring you developments in the financial and capital market as it relates to economy. It's Thursday, October 8, 2020, and today we'll be looking at the September 2020 Nigerian Capital Market Service Report, which is always published by Proshare, Nigeria's leading financial information hub. And we'll be having a conversation on this report, some key takeaways and things that market stakeholders and investing public should take note of. And with me to have this conversation will be Mr. Saheed Kiaribe. He's the Director of Research, Proshare. Nice to have you, Mr. Saheed.
Good morning, Otto.
But before we go on with this conversation, let's give you some updates in the market. First, to let you know that yesterday, the equities market closed on a negative note as the NSE ASI depreciated by minus 0.95%. That was the report, and it closed at 28,634.35 basis points as against plus 4.92% appreciation recorded previously. Its year-to-date returns currently stands at plus 6.68%. In terms of market breadth closed at negative as Berger led 21 gainers as against 31 losers, who topped by Unilever at the end of yesterday's session, which showed an unimproved performance when compared with previous outlook. In terms of market turnover, the market turnover closed positive as volume moved up by plus 11.13% as against plus 24.10% uptick recorded in the previous. Guaranty Trust Bank topped the market value list. In terms of volume shockers, Mansard led the list of active stocks that recorded impressive volume spikes at the end of yesterday's session. And that is from the equities market space. As you all know, every Thursday we take a look at activities in the commodities market, activities there, how it's really impacting our economy. So we take these excerpts from Proshare Research, looking at the article, Why Nigeria Should Join the Ghana Ivory Coast cartel when it comes to cocoa. As we all know, the southwestern region has been over time the belt for cocoa production, and there's a lot of opportunities for Nigeria. According to the report, in July 2019, Ghana and Ivory Coast, the world's top two cocoa producers, joined forces to impose a floor price for cocoa of about $2,600 per ton and a living income differential of $400 per ton. This is a price chocolate companies must pay if they want to assess their more than 60% share of global supply. Through this partnership, their sales policies will be harmonized to have greater impact and also increase their earnings. From the report, it said that in September 2020, the cartel reached a decision to raise the fixed farm gates price by 21% for the main crop of the 2020-2021 season starting October 1st, 2020. This increment is to tackle poverty among farmers and ensure better pay to producers. From this article, it states how Nigeria should respond to this development. Cocoa, like I said earlier, was a major agricultural exports crop and a top foreign exchange earner in the 1950s and 1960s in Nigeria. Prior to the discovery of crude oil in commercial quantities in the 1970s, Nigeria was the world's second largest producer of cocoa. Some very interesting facts from history. But today, Nigeria currently ranks the fourth largest cocoa producing country in the world. With total output of approximately 300,000 tons, the country is behind Ivory Coast, who has 2 million tons, and Ghana, that has 883,652 tons, and Indonesia, which has 659,776 tons. For the African economy, the price hike will ensure that these two countries, Ivory Coast and Ghana, maximize their revenue from the $100 billion global chocolate industry's earnings. It will also serve as an encouragement to the farmers as they walk away from a life of back-breaking labor with little reward. For Nigeria, where cocoa is its largest agricultural exports commodity, accounting for 1.46% of total exports and 41.38% of total agricultural exports as of second quarter 2020, it will be unable to test the success in the price hike as its cocoa sector suffers from deregulation, poor financing, and infrastructure, the tripod, which has to be addressed. And clearly it says if you can't beat them, then join them. That's the going word. So at 300,000 tons output, local demand cannot be met. Companies such as Nestle and Cadbury, so as to meet up with their own production, had to resort to importation of these beans, which basically should have been sourced locally to increase government income. The price hike by the world's top 2 cocoa producers serves as a tailwind towards improving and increasing cocoa market revenue. Nigeria, who is the 4th largest producer in the world, should consider joining the cartel, and this is why. These are the reasons why. Of course, the falling oil price is one reason. As of October 3rd, 2020, Brent crude was trading at $39.27 per barrel. That was as at 1:26 p.m. In that period. The dwindling oil price continues to eat deep into our government revenue. And of course, we're already seeing the estimate as the president will present the budget today. And this seems like the perfect time for the government to increase the exposure to the agricultural sector by joining hands with their African counterparts so as to increase their export earnings and, of course, gain from the Miaga outputs. So the 2 West African nations have created a joint body to improve coordination in research, price setting, and the fight against child labor. It is important that Nigeria joins in leaving their long neglected cocoa research facilities and team up with the cartel to find the best way to tackle Africa's top cocoa disease, the black pod disease. And also there are benefits for Nigeria if it takes advantage of this new cocoa market, particularly the one in China's cocoa trade center, the Hunan province, who opened the cocoa trade center to join Africa. This will create opportunity and exposure like Ghana and Cote d'Ivoire are doing, and that will at the end improve export earnings and value for the country. So it's very important that Nigeria joins this booming cartel Ivory Coast and Ghana has set to create value from cocoa. Definitely, that's the way to go, and hopefully we'll move in that direction. Let's get on to our conversation today. The Proshare, Nigeria's leading financial information hub, as it always does, providing market intelligence, providing incisive analysis, has published the September 2020 Nigerian Capital Market Service Report. That report is one that reviews activities in the capital market, the entire ecosystem, and developments that occurred from the equities to the listed securities down to the debt market, giving us an insight into what really happened. And of course, I have Mr. Saheed Kiaribe. Nice once again to have you. From this report, it shows again that the equities market closed in a positive manner. I mean, there was an improvement in the NSE ASI from 2.57%. It closed at plus 5.94%. Initially, people didn't really expect that this would be the scenario. What, from your insight, shaped this performance for September?
Yes, thank you, Otto. The market recorded a kind of improvement in performance in the month of September 2020. And it is important to state that even though if you look at the market performance in the course of the month of September, the market has been fluctuating in and out of the positive and negative territory. Yes, But at the end of the MPC meeting of September 2020, we noticed that the market sustained positive position, and that was what was witnessed all through the remaining days in the month of September, and even eating into the month of October currently, except for yesterday, when we recorded a reversal, 0.95% loss in the market performance. So if you look at other markets, like the money market and the bonds market, for instance, there has been a kind of liquidity in those markets. And looking at the yields, the yields are currently low, and investors are looking for where to put this money. So I can say that some of these monies that are actually leaving the money market are finding their way into equities markets. And that is what is supporting the performance you are seeing now in the equities market.
So that shows that no matter what happens, even like the Proshare online trading report captured against all odds, transactions are still majorly in the equities market. That means equities market is still that much desired safe space for activities in the market.
I would say yes, because the market, we still have a few investors that still find the market a place to go and put in end money.
Very important, very important. And when we look at the year-to-date performance, it's currently minus 0.04%. We've talked with several analysts who say, that the reality is that we don't expect a positive performance this year. Particularly, we're even looking at some positive trend, but with the COVID disruption, the pandemic, is definitely going to be a difficult one. But do you see any improvement in this regard, considering this particular current year-to-date performance of plus 0.04%, or will the prevailing factor of the COVID-19 disruption continue to impact the performance that will likely see another negative close for the year?
The reality is, as at the end of September, the year-to-date performance of the market stood at minus 0.04%. But eating into the month of October, currently the return is currently in a positive territory. But the bond and fixed income market has witnessed a lot of inflow from bond maturities and OMO. So, and this money has to go to somewhere, because currently the yields are very low. Even though we know that some investors will still reinvest in the bond and fixed income market, so might decide to move to another asset class, and equity market might be one of them. So it is expected that if this trend continues and there is no policy shift or a kind of information that can drive attention to another asset class, we might see a situation whereby the market might close the year positive. And just to dive in, when you say policy shifts, like what one or two policies based on what you've been monitoring could really impact the market, as you've seen so far since January? One of such policy shifts is the MPR. Before the last MPC meeting, we know the yields in the market has been very low because there has been a lot of liquidity. Even this week, it is expected that over 500 billion will matured from the OMO, and that will eat this system. And after this, such money eats the system, it has to go somewhere. It's either it's reinvested in the fixed income market, or it goes to another asset class. So if such we continue to see a kind of sustained policy from the CBN that discourages investment in the fixed income market, and money has to move elsewhere, we might
see some previous month.
Let me start by saying that in Q3, we saw a lot of improvements in market performance generally. At the end of H1 in 2020, a lot of the sector indices were in red. A lot of them were in red. But compared to Q3 2020, except for the NSE Oil and Gas Index and the SM market, which recorded a negative return, the rest are in green zones.
And better than what happened in Q2 2020?
Exactly. Far better than the performance recorded at Q2.
And that just shows how the market has really improved. For the oil and gas sector, definitely there's more need for some clarity in regulations. We heard the PIB had been sent for a revised PIB bill, but we're hearing some feelers again that maybe it's next year they will deliberate on it. That definitely may see impact the oil and gas sector, from what you see.
Very correct. The PIB, the issue around the PIB has been in the news for
a long time
now. It was expected that the bill will be passed even before the coming of the current administration during the Goodluck Jonathan's government. But at the end of the day, we saw a shift in position. Currently, this government has decided to repackage the bill and send it back to the National Assembly for consideration. And hopefully, it is expected that if this bill is passed, we will see a kind of foreign investment and coming into the oil and gas sector, which will eventually help correct a lot.
Definitely. And an interesting aspect is that for the second consecutive month, I noticed that the Nigerian Stock Exchange market capitalization topped again. You know, over time it has been dominated by the FMDQ tech market. It hit about 30 trillion. I think the FMDQ is at 27, while the NSD is around 538 billion. But I just wanted to start with, I mean, this again shows some level of deepening of activity in the NSE. Let's start with the NSE.
That's another key takeaway from that report. As at the end of H1, the FMDQ market continued to dominate in terms of market share among these three markets, and the market continued to over around 50% and 51% in terms of market capitalization. But at the end of Q3, it's a different story entirely, because right now the NSE is dominating with about 52%. The FMDQ market is dominating as 47%, while the NAS OTC market continues to have its 1% share of the market capitalization in that order. And I must say that if further analysis on these three markets reveal that the NSE ASI market capitalization for the equities, the bonds, improved a bit, while the debt market size in the FMDQ market recorded a slight drop from about 28 trillion to 27. And this has F-shaped these ratios.
And of course, the equities seem to be the way to go. And just recently, NSE brought out the fixed income pricing measures. Do you see that deepening further again for them?
Before now, which is I think is taking effect in this month of October.
Yes.
Hopefully, maybe NSE is trying to kind of encourage a kind of investment, and that will also help the operators in the market to begin to take investment in the fixed income instrument listed on NSE more seriously, as we are currently seeing on the FMDQ market.
Yeah, and then when you look at the NSD, consistently, there's always been around that 1%. We're looking at maybe an ambitious target, at least maybe 2, 3, 4% of the. What from what you've been monitoring and seeing from the unlisted security space, what one or two
that it has drive new companies to get listed, quote unquote, now on his platform. So that will help a share that they currently represent among the things to list. That is one. Two, even the existing companies that are listed on the NSD market need to be pushed. And I will use the word pushed because I'm not sure is all the stocks listed on that market that moves on a daily basis. So you need to kind of make encourage companies and encourage investors to trade in this market regularly, i.e. the NSD market need to push for more disclosures from the companies that are listed on that market. That will encourage investors to actually know what is going on with those companies, and they can take decisions if they want to buy or they want to sell. It will help aid decision making in trading in that market.
We've seen a $1 trillion slide from the FMDQ, like you rightly said. Are there one or two factors that can help that maybe closing the year gain more ground in terms of the share of the markets?
Well, as we are rightly pointed out, that's a market that is that we just stated that there has been a lot of liquidity in that market. Even though what can help that market now is to an improvement in yields. So if the yield improves, it will encourage investors to put in more money, and we might begin to see the debt market size going up.
In terms of regulations, I know that you also highlight some developments across the regulatory space through the month. Do you see a more proactive step taken in terms of now we have the IST, Investment Securities Tribunal, which was captured in the report, was properly now constituted? Would that really help again to boost market confidence? Because there are several outstanding cases concerning investor protection, investor rights that have been pending.
For market confidence, I think investors need to be properly protected. I was having a conversation with somebody that we were discussing around all the fintech companies that goes into investment. They I don't want to mention names now. and the person was asking me, can I invest in this? Can I invest in that? And I take a deep breath, and my response was that if anything should go wrong with this investment, who do you go to?
That's a big question.
It's a big question. So for the IST to be constituted is a good one for the market because infractions happen day by day.
Yeah.
And if investors has nowhere to go to get these issues resolved, it indirectly it affects markets, the market performance, and investors begin to lose confidence in the market. But the constitution of the IST is a good analogy, and if there are pending issues, they need to be fast-tracked and resolved. And investors can at least have that confidence that at least when I invest my money in this market, I can be rest assured that it won't go down the drain without having where to resolve to. Also, the issue of investors protection fund, that I know that currently exists in the market, if it's well properly channeled and investors are well protected, all these things will eventually culminate into a good
market
position for the market.
Yeah, and then there's one area I know that you work a lot with millennials and Gen Zs, even you engage them severally on issues. So all the key market leaders, from the NSC CEO, Mr. Oscar Onyema, to the group managing director of the FMDQ group, that's Mr. Bola Adelekupa, and Mr. Bola Jomale, not even the commodities, they believe that yes, there's a lot that can be done, bringing in the millennials to participate in the market. And your online trading report even captured that, the need for CMOs to leverage technology. Do you think that technology has really played a very important role this period of the COVID to improve market operations? And are there other avenues that self-regulatory organizations in the market can play in encouraging more of these people? Because what you just raised now, I guess those people that are talking to you about fintech also will be in that millennial category. And when you invest in something that is not regulated or protected, your fingers get burnt. We've seen this happen in 2009. We've seen it happen again. That was 2 years ago. I think the MMM whole issue and other platforms. What can be done more to encourage and ensure that these issues are taken into consideration?
With the advent of the technology into market activities, I think the market regulators, so to say, has to do more in terms of bringing enlightenment. I know kind of using technology now to attract these millennials, because a lot of them, you find a lot of them making use of apps like Twitter and co. So you have to begin to do content like videos that explains how the market works, and you let them know if you need to invest in this, these are the things you need to do, these are the steps you need to take. So if you begin to look into how to use technology to educate these young chaps, you can catch them early. And considering the fact that the market is expected to be a long-term investment, so if you are investing now, you let them realize that you can invest now and reap the return in the next 15, 20 years. So rather than us having a speculated market that continues to eat into the market, and the market keeps behaving in a funny manner that is not too...
You know, and like your generation and the younger ones too, they look at now appreciation, like I want to invest now and let me see returns maybe in the next 1 month or so. That this class of investors, if you look at the various the domestic and foreign investment domination, they are this class of investors now, like you rightly said. They don't even want to do long term. They want to, like, if I invest now, what's the guarantee I can get off? And then there are opportunities that they're told, like mutual funds and others. You think innovation is very key in this regard to asset classes, because that's something that the NSC set up different committees to improve in terms of the asset classes and their penetration.
Let me start by saying that the capital market generally was not conceived as a market whereby you invest now and you want to quickly reap.
It's a long term,
It's for over a period of time. So I think part of the education that needs to be done is to let them realize that there are times that has to...
investing long term definitely is a good way to go for anybody, because of the fact that it has its own prediction and returns. Definitely. And then finally, what's your word? This is the World Investor Week. IOSCO is celebrating across 100 countries. What's your word to the investing public and the community? Because, like I said earlier, sometimes we get burnt when we put investments in platforms. Particularly, I must admit, Mr. Saheed, that there's a lot of platforms that are coming out. And recently, SEC even brought out the initial guidelines for digital assets regulations. though the stakeholders still need more clarity on that. Investors across the world, as this World Investor Week is being held 2020, to improve awareness and enlightenment, what should be the key things that an investor should look at for this period?
Yeah, thank you, Otto. My key word to investors at this time is that, one, do your findings, then invest in value. You have to, nobody is an island of knowledge. At least you can seek professional advice from people that knows better in terms of investment. So do proper findings and follow every laid down procedures in terms of market processes if you need to invest in the market, so that you won't have to cry later on. So I will encourage people out there, investing is good, but do proper findings. Proshare, for instance, is known for turning out information around the market and the economy. Read about what is happening to those companies before you invest. Read about what is happening to those instruments before you invest. Currently, we know T-bills to be a very good instrument to invest in. Right now, the yields are low, but for some people, they will still find it as a safe haven. But for some, they will rather prefer that they expect the yields to grow before they invest. So read from reliable sources what is happening currently in those markets and invest in value.
Yeah, definitely invest in value. Thank you very much, Mr. Saheed Kiaribe, Director of Research, Proshare, and I most appreciate the efforts you and your team are carrying out in producing incisive, intelligent reports covering the capital market and even down to the economy. And we want to wish you more grace to your efforts as you continue to provide public enlightenment, which is very important to our market, to avoid the population or tendency of having more fingers burnt, as we remember in 2009, 2010. Thank you once again. I hope to have you subsequently in
Thank you for having me.
To look at the next edition of the Capital Market Service Reports. And that was a very interesting conversation, and there's clear information to all investing public and the entirety of the nation. If you want to invest in the market, you must invest for value, but you must do your findings. And one way you can do your findings is logging on to www.prosharenG.com. You can click onto the analyst and also our market column, where you see all the reports analysis on stock activities, company performance. There you can get the information required to make that wise investment decisions. And based on today's discussion around the Nigerian Capital Market Service Report, which is published by Proshare monthly in September, you can send your views and comments to news@prosharenG.com, some of the developments in the reports that you will read if you log on to our site. And also you can also send also to research@prosharenG.com, and we would be willing to look at it and respond appropriately as required. Don't forget, to our millennials, to Gen Zs, and to the general public, in this period, avoid investing in schemes or platforms that are not regulated or registered by the Securities and Exchange Commission, because we don't want you to get your fingers burnt in your hard-earned investments. Until we come your way again, let's make it happen again tomorrow, same time, 10 a.m., as we look at the market and developments of the financial to capital market. Thank you for watching. Have a nice day and stay safe.